Hello, guys. How you doing out there? This is Real Estate Reality with your hosts Darren and Joe over at Urban Hillsides Real Estate. Thanks for joining us. It's Thursday. It's 2 p.m. and we've got a lot to talk about in an hour, don't we, Darren?
We do, man. Like we there was a big day that happened, and the impact was
Yeah.
not negative. So it was a good. The response in the market has been positive. So
Well, as we were curating this, there's plenty of information out there, plenty of articles to choose from. We'll try to stay on point and get to what we feel you guys need to hear based on those news updates of yesterday. Okay, so before I get too far into it, let me go ahead and do my disclaimer. Darren Hubert and Joe Cloninger are real estate agents at Avenue 8 under the Urban Hillsides brand. All opinions expressed by Urban Hillsides or guests on this video are solely their opinions and do not reflect the opinions of Avenue 8. You should not treat any opinion expressed by Urban Hillsides as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of Urban Hillsides team's opinions. This video is for informational purposes only. All right, there you go. Okay, so just to review. Oh, and I wanted to give you an update. Last week we did hyper-local real estate news, and I think the first story, Darren, was about the 6th Street Bridge and how it's being abused. Well, I don't know the details, but sure enough, it's been closed.
oh, I didn't hear that.
So cars are not allowed to cross it until they have figured out how to keep people from drag racing on it, skateboarding over the arches. It's just a mess. It's just a horrible mess. Or bikers from getting run over. I guess the plastic or nylon dividers between the street and the bike lanes don't hold up very well. They found out because all these drag racers were crashing and they run right over them. So some things need to be figured out. But beyond that, guys, we're going to talk about the Fed rate hike. We're also going to talk about our new listing out in Santa Clarita, and then also our usual, which is seller wins and buyer wins from the last 7 days. So let's get started, Darren. I am going to go ahead and open up my other, let's see here. Hold on. I'll allow it to see your screen. Sure. There's always something new with technology. I wish it would just stand still for once. Always mute up.
I support that, Joe, wholeheartedly.
Right? Okay. So let's get rid of this. All right. Well, I'm going to move over here. Let's see. And hopefully, let's see. Share screen. Select window or screen. Okay. Something new. All right. So let's start with a Fortune article. It just gives us an overview and how this is going to hit us as citizens. Many of us have different needs. This kind of covers it all. And the federal rate hike. So the Fed raises rates by another 75 basis points. How that can affect your money. And I'll go ahead and put this in the comments so people can check it out themselves.
Sure, and I'll just start by saying it was expected.
Yeah.
Anything other than that would have been a surprise.
Yep. I think the thing was, obviously, everyone was expecting, could it be 1? Instead of 75 basis points, could it be 100? And it wasn't. So that was some good news there. But let me roll through this super quick. On July 27th, the Federal Reserve announced another big rate hike, raising the federal funds rate by 75 basis points to a range of 2.25 to 2.5%. This move follows a 75 basis point hike in June and 2 smaller rate hikes at the March and May Federal Open Market Committee meetings, all part of the central bank's strategy to fight stubbornly high inflation. The Fed's decision today is not as aggressive as the 100 BPS increase that had been rumored for the FOMC's latest meeting, but it's more bold than the smaller hikes that started the year, indicating the Fed's desire to get inflation under control as soon as possible. The FOMC will meet 3 more times in 2022. Federal Reserve Chair Jerome Powell said in a press conference following the latest announcement that another unusually large rate hike could be appropriate at the next meeting in September. These rate hikes have been large and have come quickly, and it's likely that their full effect hasn't been felt by the economy, Powell said. There's probably significant additional tightening in the pipeline. So let me just jump over this because I know we have another couple articles to check out. So let me just cut to 4 ways the Fed rate increase can affect your money. So number 1, Fed rate increases affect the stock market, but not necessarily how you'd think. Fed rate increases have a pretty ambiguous impact on the stock market. On the one hand, higher rates may incentivize some investors to sell stocks and take profits. But there's plenty of evidence that over the long term, rate hikes don't hurt stocks. In the short term, the most significant immediate impact of rate increases is on market psychology. When the FOMC raises rates, professional traders might quickly sell stocks and move into more defensive investments without waiting for higher rates to work their way through the economy. But over the long term, the data shows that stock markets can rise in some cases when the Fed tightens monetary policy. Dow Jones Market Data analyzed the 5 most recent rate hike cycles to see what history says about stock market returns in these periods. Their analysis showed that during these 5 long-term periods, the 3 leading stock market indexes only declined during one rate hike cycle, from June 1999 to January 2001, during the dot-com crash. Okay, so number 2.
So what happened? They hiked rates yesterday, and the stock market went up substantially 2 days in a row.
Right. So that's telling us what? It's already been kind of packaged in, not just mortgage rates.
It's been packaged in, and B, the Fed comments were leading towards the belief that they're getting inflation under control. And the stock market's always attempting to predict the future. It's not about the past for them. So those comments had a real impact on the market to the positive side.
Right. Number 2, credit card interest becomes more expensive. When the Fed raises interest rates, your credit card debt becomes more expensive. That's because interest rates on consumer debt, like carrying a balance on a credit card, tend to move in lockstep with the Fed's rate. The Fed's interest rate policy impacts how much commercial banks charge each other for short-term loans. A higher Fed funds rate means more expensive borrowing costs, which can reduce demand among banks and other financial institutions to borrow money. Okay, so enough there.
Yeah.
Okay, and then number 3, mortgages and loans become costlier. Another Fed rate hike means that those borrowing to buy a house or to tap their current home equity could face bigger housing bill in the coming months. Shorter term home loans with floating rates like adjustable rate mortgages and home equity lines of credit are tied to the Fed funds rate. So when the Fed's rate rises, ARM and HELOC rates soon follow. With ARMs, there's an initial period when the rate is fixed before transitioning to an adjustable rate. However, due to the recent spike in the 30-year fixed mortgage rates, ARM rates have been lower and more attractive to some borrowers. The 30-year fixed rate mortgage averaged 5.54% compared to the average 5/1 ARM of 4.31% as of July 21st, according to Freddie Mac. Still, any action by the Fed to hike its rate will likely lead to higher ARM and HELOC rates. Any comments there?
We're going to show a chart about rates and the impact on the hikes, so I'll just hold off on that.
All right. And let's just finish up here. Number 4, rates on savings accounts rise but slowly. Rising Fed interest rates are a good omen for savers who are seeing the rates on savings accounts creep up. There's no direct link between the federal funds rate and deposit rates, but banks are slowly increasing the annual percentage yield they pay on deposit accounts, including savings accounts, money market accounts, and certificates of deposits. Financial institutions raise their rates to attract deposits, but they currently have plenty of cash on hand and can take their time with hiking yields. How quickly you'll see higher APYs on deposits depends on where you bank. Online banks, smaller banks, and credit unions typically offer more attractive yields than big banks and have generally been increasing rates faster because they have to compete more for deposits. So there's that. So yeah, let's go ahead and run over to that chart. And it's a real-time chart, isn't it, Darren? We're going to
Yes,
see
it
where
is.
it is right now. Yeah, I love
Yeah.
that. Okay. So this is looking at 30-year fixed mortgage rates. And you want to go ahead and summarize it a bit, Darren?
Sure. So on my end, Joe, you can click on that date, and I actually shortened the range. Right now, it's 1 year.
Okay.
Um,
What did you want?
I just shortened it to to start at January 1, 2022.
All right. January 1, 2022. Where is it? 2022. Oops. January 1. Okay. There we go. Mm-hmm.
All right. So my reason for doing that is we're seeing the more recent movements a little
Right.
better,
Including
right?
March and yeah, the run up. Yeah.
Exactly. So
Yeah.
from January, rates were in that 3% range starting the beginning of the year.
Right.
They ran up in May to the mid fives, moved back down. Then we had the previous 3/4 bump, and
Right.
that spiked. So this is the story we've been telling to all of our clients, both on the sell and the buy side. Just in preparation, we can give you history. We can't predict the future, but the most recent history from a couple months ago showed a spike when they did that 3/4 bump, a
Right. There
huge
we are,
spike.
June. Yeah, it's saying here
Right.
6.28. Yep.
Yeah. It moved up. It was substantial. It moved
Yep.
from like 5.5 to 6.25. It moved up that 3/4
Right.
and almost immediately. But since then, it's been tapering down.
Yeah, look at that
Uh,
trend. Yeah.
right. So this is what there is not a direct correlation like there is on the commercial banks and well, savings rate isn't a direct correlation, but it isn't as direct. It's a little more loose. And since yesterday, if you scroll down a little bit there, Joe, you see the MND 30-year fixed rate daily
Mm-hmm. Yep.
to some of the text. So yesterday rates were 5.5. Today it's calling out rates at 5.2.
Wow.
So we had a three-quarter point bump
But
on the Fed funds rate, and we had a 3/8 reduction almost on the 30-year mortgage rate. That's huge.
yeah.
Not
Yeah.
expected. Who knew? I will say this. There might be some more pressure, some more tightening to try to
Yeah.
constrict a little more because I think their attempt is to constrict the market a bit and slow it down. But in the end, this is having a positive effect on the real estate market, at least over a 2-day period.
Well, I was going to say, we can go into the Inman article and that kind of finishes this out.
Sure.
Can we do that? Yeah.
Yeah.
So, this was, here, let me put mortgage. This is a great page. This mortgage daily news thing.
Yeah. I've been watching this for 15 years, man.
Yeah. Oh man, it's awesome. Yeah. Let me send this off to everyone. Let's see here. All right, there it goes. So 5.22. So what I'm going to next is Inman.com. Inman is a real estate industry resource for agents and brokerages. And the title of this one is The Fed's Steady Approach to Rate Hikes Could Ease Pressure on Mortgages. Fed Chairman Jerome Powell hinted Wednesday that the U.S. Central Bank is looking to dial back the pace of interest rates hikes as soon as the impact of increases shows up in inflation data. Excuse me. So let's see here. I do have an account. I don't know why I'm not signed in.
And that's the news that made everything turn positive. The belief that it's already having an impact. It takes some time for it to show up in the numbers, but he believes it's impactful already, and that's what's. I'm assuming the rate drop is triggered from, but certainly the stock market rise has been triggered from that.
Okay, here we are. In a move that could take some pressure off of mortgage rates, Federal Reserve policymakers voted Wednesday to raise short-term interest rates by the same amount as they did last month, instead of taking even more drastic measures to fight inflation. The 75 basis point increase in the short-term federal funds rate approved last month was the biggest rate increase since 1994. But because there are signs that inflation continues to rage unchecked, some analysts had speculated that the Fed might make an even more aggressive move in July and approve a full 1 percentage point rate hike. By sticking with another 75 basis point increase that was already priced in by bond market investors, the Fed has staked out a middle ground that's designed to communicate that policymakers are still concerned about inflation, but don't want to slam the brakes too hard on economic growth. Marty Green of law firm Polinsky Vidal Green said some of his firm's mortgage lending clients are anticipating, quote, a slight improvement in mortgage interest rates in response to the Fed's actions, particularly after the recent speculation that the Fed might raise rates in July a full percentage point. Rates on 10-year Treasury bonds, a good indicator of where mortgage rates could be headed next, fell below 2.75% after the Fed's announcement, down from a 52-week high of 3.48% on June 14th. Wow. Mike Fratantoni, chief economist for the Mortgage Bankers Association, noted that mortgage rates have already dropped about a half a percentage point in recent weeks, heading closer to 5.5% than the 6% rate seen in June. There is a tug of war in market expectations between the persistently high inflation numbers and resulting rapid Fed hikes and the increasing risk of a sharp slowdown and possible recession, Fratantoni said in a statement provided to Inman. As a result, mortgage rates may have already peaked and could stay between 5% and 5.5% through the remainder of 2022. If that were to be the case, potential buyers who had been scared off by the rate spike might find their way back to the housing market. So, shows here mortgage rates ease. Let's see, this is back to June 28th, it looks like, to now. So, yeah, pretty steady over the last 30 days. Nothing crazy. Since more than doubling from historic pandemic-induced lows, rates for 30-year fixed-rate loans have eased somewhat from a 2022 high of 6.06%, registered June 14th by Optimal Blue Mortgage Market Indices. Oops. More advertising. Despite that, the demand for purchase mortgages was down 18% last week when compared to a year ago, according to a weekly survey by the Mortgage Bankers Association. The question is whether the slowdown is a result of most consumers simply pausing a purchase decision while they see where interest rate and home prices settle, or whether they are having to delay a purchase decision indefinitely because of affordability concerns, Green said in a statement to Inman. In a statement on their unanimous decision to raise the federal funds rate by 75 basis points, Fed policymakers said they remain strongly committed to returning inflation to its 2% objective. And what are we at now, Darren? 9 or 8?
Yeah, the last one was like 9.1 or something. Yeah. But that's a year over year. I mean, that's yeah. It's always looking towards the past, and they're comparing it over time. So again, all the numbers from the Fed and the data they provide is always about the past. So they having to make their own predictions on their policy and how it will impact the present.
Right.
And then they have to wait until time passes to determine if it did.
Yeah. Well, right. You went out 2 days. Yeah. These guys are going out into the fall. So that's nice to see.
Right.
And maybe they know a little more. We'll see.
Yeah, they do for sure.
Yeah. So that was the gist of it, basically. But so what does this mean, Darren, if you're a buyer right now? What does this mean if you're a seller, possibly right now? What sort of choices, what kind of thinking should they be?
Well, so if you're a seller, it's clearly good news because it maintains affordability a little more.
Right.
I mean, when the numbers go up dramatically on the interest rates, affordability drops, and buyers just leave. Buyers have obviously been dealing with rising prices for a long time, and now those are easing. They're they're still considered to be rising, but at a slower pace. Some are dropping, but rising at a lower pace or stagnant is kind of where we're at. But this allows that to level off rather than go in reverse, I believe.
Yeah.
So from a seller perspective, this is good. And now it's psychology of the buyers. What's their position? Right. How are they going to feel about the market? Is this enough to get them to jump back in? This is one of those little, there's always a series of little waves, ups and downs. We spoke about that. We were in a little lull as we were waiting and anticipating this most recent hike after the spike in rates from the last hike. Right. And that very well could have just been a buying opportunity. I think a lot of buyers stood on the side. Some jumped in.
Yeah.
If the rates stay down, if they stay in that below 5.5 range,
yeah.
I think we're going to get buyers jumping back in again.
Yep.
And it's going to be positive for values.
Well, as the article stated, right, on the buyer side, there are ones that are kind of waiting it out. Yeah, let's see if the prices go down. Let's see if mortgage rates go down a little bit more. Yeah. And then there are ones that just can't afford. And it's really hitting them hard. So as we've said before, certainly there may be less buyers in this market. And for a seller, all they really should be concerned about is if they have two offers, right? We talk about that.
Right. So I would say this year we've seen that. Certainly maybe starting February. We went from a crazy number of offers to still multiple offers, but not the volume that we were seeing in the past.
Right.
And in some cases, now that isn't the case. You're definitely seeing some price reductions. It's a little more balanced, but the volume is down across the board, even on great properties, unless they're, we'll go through an evaluation of solds and actives. And if it's ridiculous, if it's way underpriced, the volume will be up. You'll get a lot of people, you'll get a ton of offers. But if it's in the range of market value, then it's not the number of offers isn't as high.
Right.
So from a buyer perspective, it's positive because affordability is getting a little better. Right. It may mean an increase in prices or stabilizing prices without a reverse, which some buyers hope for. But it does mean that they can afford more.
Great.
So that's a plus.
Okay. So a little bit of a plateau here. We'll see what September brings us. I don't know the date, but right. That'll be our next report, I guess.
Yep.
But this stuff changes week by week. So I know we're going to talk about it ourselves every week. All right. Well, let's move on. Darren, I wanted to pull up our new listing. Let's see here. So it's an open house this Saturday, 2 to 5. And do you want to talk about it a little bit? And I'll just
sure
pull up some photos.
It's a little further than we normally are, but it was a good connection. And
okay. I think you just hit on a good thing before we even move further. So, great relationship. Mm-hmm. You had a working relationship with her for what, 15 years? Through bankruptcies?
Yes. Yep, in that range.
Right. So we're just honored that she, came back with her own personal real estate. That's awesome.
Absolutely. And we went out of our way because of that trust, because of that connection. And just helped get the property into the best state it could be as we just hit the market with it.
Well, that's the thing. How long had she been living there? I forget. 20 years?
Oh, it was, I believe, over 20
30?
years.
Yeah.
In that range. She had been there for a long time. It was her family home, raised her family there. And it was her time to move on. And she's moved out of state. So we're now going to do our best to help sell it for the best price we can get. I think she feels she has a sense of how the property looks, not only from photos, but because we do the 3D scan, she can evaluate the entire space. I'm sure.
Just describe what kind of prep did we do on this? house? Because it's a different looking house now.
Yeah. I mean,
How did
first
we
off,
help her?
when people live in a house for that long, they just have a lot of space. And she had done
Yeah,
some upgrades,
yeah,
but just living there, with all your possessions, and
yeah,
so there was some wear and tear that had to be
yeah.
addressed. It's amazing, and it's not the only thing that was done, but it's amazing how a paint job,
Hmm.
a full paint job on an interior cleans up a house and just makes it look
Yeah,
light and bright.
yeah.
This house has an open floor plan, low vaulted ceilings,
Hmm.
um, and with multiple colors, it was kind of making it feel a little more choppy.
Yeah.
Uh, but
Oh,
that's
from room to
great.
room. Sure. Yeah.
Yeah, we're fortunate to help bring the best price when a seller does move out and the house can be shown in a vacant state,
Hmm.
because you can just maximize the appeal uh,
Right.
compared to them being there with their possessions and their choice of finishes. It really isn't about. Um, it's really about
Hmm.
creating a clean slate so that somebody else can envision themselves living there.
Yeah.
And
Yeah.
sometimes, personal possessions from a seller of 20 plus years can
Yeah.
can get in the way of that.
Yeah.
So a buyer should be able to see what this could be for them, and
Yeah.
moving it. It's a great neighborhood. It's great schools. It's
Yeah. And the school's just like a block or two away, right?
very close, definitely
That's
within
awesome.
walking distance.
Yeah.
Yeah, yeah.
Um,
So
well, check out the website, urbanhillsides.com. You know, Darren, as you said, it's certainly now in a condition where a lot of people could see themselves living here, but definitely a great starter home for somebody, for the price, for the area, for the schools, for the condition. It's move-in ready. It's uh, it's really nice.
yeah,
Yeah. Okay. Well, great guys. Check that out. And we'll be happy to see you 2 to 5 on Saturday. Uh, okay. Let's now move on. I've got to pull up my emails. We're going to go now to seller wins. And let's see, there it is. And Darren, there were some definite picks that we made from before that they're on the list. They'll be very interesting to see.
sure.
Uh, okay. All right. So we're going to start with seller wins, and we're going to start with 1915 Myra. Let's go there. Now this started at 2,999,000, and it landed, Darren, I think as you predicted, 3,516,000 for a $517,000 increase. Pretty amazing. Okay.
Yeah, it's a beautiful house. It's Spanish. It's well staged. It's clean. It's got a pool. It's got
Yeah.
a nice, true master bathroom. The shower in there is awesome.
Well, let me
Um,
go ahead and just do some of the specs here. So 1915 Myra Avenue. This is in Los Feliz. It's a 3 bedroom, 3 bath, 2,762 square foot living space on a 5,300 square foot lot. Again, $3,516,000. Took 9 days on the market, and this was listed by Bonnie Bryant and Joe Reichling. And on the buy side, the agent was Jody Rubin. So congrats to those guys. Great house.
yep.
Yep. All right. Um, we will now move on to, let's see here, 2056 Lakeshore Avenue. Darren, this is in your neck of the woods, Echo Park. This started at 999,000 list price, and see here, ended at 1,300,000.
Yeah, I would say that's kind of, yeah, I drive by this house frequently.
Right?
That's kind of the price at this point. So I knew this one was underpriced when it went to market. That was
Yeah.
absolutely the case, unless there were
Yeah.
major issues that we were not aware of. 1.3 seems to be kind of
Mm-hmm.
the
It's the new.
move-in ready level
Yeah.
house.
Yeah. Yeah.
Yeah,
Well,
and then
$301,000 more. Let me just go through the specs again. 2056 Lakeshore Avenue, 2 bedroom, 1 bath. Wow. 973 square feet. It's called vendor enhanced. um, 4,500 square foot lot, 1,300,000, 10 days on the market. And this is brought to us by Joshua Sternberg, Sarah McCowan, and Gabriella Labra. And out of area agents, but they got it done. On the buy side, the selling agent representing the buyer is Tito Pedraza. So, yeah, I forget if we covered this house. I don't know if we did.
no,
No, we
I
didn't.
don't think we highlighted it.
Yeah, yeah.
I mean,
But
out of area agents, what I would say there is that they didn't do a lot of
yeah,
prep.
I was
You
just
know,
looking at the paint job outside. Look at that. Oh,
yeah, I
shoot.
get it. So that's it could have fetched more
Yeah,
if they would have done some
really
more
good
prep. I
point,
mean,
man.
like
Really good point.
$15,000 would have gone a long way.
Yeah, yep. Wow. Yeah,
But it is what it is. They got 300,000 over list. It should be a happy seller.
yeah. But yeah, good point. Money on the table. They left it. Okay. Next we have 1300 McCullum. We did highlight this one
Yeah,
as
that
an
one I knew would go
active.
over.
Yeah. This started at 1,675,000, and it landed at 1,972,000 for a what is that? $297,000 increase. Wow. All right. Uh, yeah, beautiful house. So this is 1300 McCullum Street, 4 bedroom, 3 bath, 1,901 square feet of living space on a 4,200 square foot lot. 1,972,000. This is in Silver Lake. Days on market 14. This is brought to us by Alyssa Valentine and Kurt Wisner. On the listing side and on the buy side, the dynamic duo of Constantine Valisarkos and Richard Johan.
Yep.
Yeah,
Cool.
great looking house. Not much to say there. Um, okay. Next we have 3578 Division. I know we looked at this. I know we had a couple buyers interested in this one.
Yeah.
And in a way, I'm glad they didn't go for it. Let's see. So this was, let's see, a 1 bedroom house, wasn't it? Let's see.
2. Yeah, 1 bed, 2 bath.
Oh, 2 bath. So yeah, 3578 Division Street, 1 bedroom, 2 bath. No square feet, it says. In Mount Washington, sold for $795,000. Now this started at the price of $549,000, so a $246,000 increase. Nice sized lot. Good amount of it is hill, 7,000 square feet. Days on market 11, and brought to us by Mark Silver. And on the buy side, Justin Satare and Scott Harvey. So congrats to those guys. There were some places, I know when we talked about it, there were some places maybe that you could add an ADU, maybe add another bedroom. But then you're giving up some outdoor space.
Well, and all of that was to the buyers we were working with. That
Right,
was an attractive option in that the list price range. As soon as
right,
you go up
right.
to $250,000,
It's gone.
adding an ADU, that means you've just spent $1,100,000 for that unit plus an ADU, and maybe that's worth
Right,
it, but it didn't work for the people we were working with.
right, right. Okay. So that is on the, let's see, again, seller wins side. On buyer wins, Let's take a look. So we are off to 4517 Caledonia Way. This started at 1,095,000, and let's see here, landed at 1,075,000. So $20,000 reduction. Let's see why. Okay, 4517 Caledonia Way. This is Glassell Park, 3-bedroom, 1-bath, 1,351 square feet. 1,075,000 was the sold price. 6,000 square foot lot. 26 days on the market, and this is brought to us by Christine Qua, and on the buy side, Vanessa Yan. So, what do you think?
Well, I see. In my opinion, there's a lot of colors in the space, and it's distracting, and it's shrinking the space. And there's there's dark tones in the kitchen.
I was going to say my immediate once from this first pick going in, I was like, oh wow, it's really dark. It looks small.
Yeah,
That's exactly what I thought.
Yeah. Then there's ceiling fans that are hanging overhead, and they're 8-foot high ceilings, so that's shrinking the space a little more. There are a lot of elements that shrunk the space. A lot of furniture in the space. So it looks to me, by looking at the photos, it looks like it could be a great property.
Yeah,
I can see that. And somebody going in can very quickly help get it there at a reasonable price, in my opinion.
Yeah. Beautiful kitchen. Love the kitchen. Okay, next. Let's see here. We are going to 3651 Holborough Drive. Let's take a look. Now this started at, a price of, $2,800,000. And it was reduced to a sold price of $2,761,000. Excuse me. Hold on. There we go. Okay. 3651 Holborough Drive, 4-bedroom, 3-bath, 2,700 square feet of living space on a 5,000 square foot lot, $2,761,800. That was, let's see, what is it? Yeah, $38,200 reduction. It took 24 days on the market to sell, and brought to us on the listing side by Karen Lower, and on the buy side, Jeffrey Lower. Must be related. But yeah, beautiful house, higher price point. What's 38,000 between two friends? It's a beautiful place.
Looks good. Yeah.
Right.
It's a great house.
I think both won here for sure. Yeah. All right. Next, let's move on to Lucille, 1940 Lucille. I think we talked about this one. This started at $3,995,000, and it ended at $3,800,000 for a $195,000 reduction. We did talk about this one because the price was way over. But I think they still helped this market. This is, let's see, I think this was a brand new build. Oh yeah, this was a hole for a long time. 1940 Lucille Avenue. This is Silver Lake, 4-bedroom, 4-bath, 3,600 square feet of living space, and a 5,500 square foot lot. $3,800,000 was the final price. Days on market 33, and this was brought to us by Rhonda Doyle and Tracy Doe. And on the buy side, Taylor Cogler. So a lot of great views.
A lot of nice decks. Yeah, the decks look fantastic.
Yeah.
Yeah, it's a well-designed house. I like the impact of the accent walls. We just, a couple of houses back, we were talking about the color chopping up the house and dividing it in many ways. There's a lot of white in this house, but they're utilizing a combination of painted accent walls, but also very large tiled walls with
Yeah.
a very nice mid-century tile type design. That
Yeah, I couldn't tell. There was one that I saw. I was like, is that wallpaper? Is that tile? I couldn't tell.
oh, there's a bathroom with wallpaper. Yeah, the black one.
Uh,
So it's a good use of tile and wallpaper
yeah.
to accentuate a bright open space. Even the colored cabinets
Yeah.
have the same impact. So there's a couple different pops of color in the house.
Yeah. Okay. There we go. Next, let's see. Let's go to Baxter, your neighborhood, man.
Yeah, they sold this one. Yeah, this is a
Yeah.
very good example.
Okay.
So I'll let you do your thing, and then I'll
Yeah,
kind of
yeah.
talk about a little bit of the history.
Yeah. So this started at 2,489,000, landed at a final price of 2,265,000 for a $224,000 reduction. Love this house. Great house. 1822 Baxter Street. This is Echo Park, 4-bedroom, 4-bath, 3,400 square feet of living space, 6,400 square feet of lot, 2,265,000. It took 40 days on the market to sell. And this was brought to us by Joe Lightfoot and Brandy Brooks on the listing side. And then on the buy side, Keely Myers. So congrats to everyone there. So yeah, what do you have to say, man?
Well, first off, I'll start with the first photo. I don't think that was the best choice. You get much. I remember years ago putting an interior photo as the first photo, and like a client being a little outraged. Why would you do that? I want the curb. What does the house look like from the street? I will say this: this house looks like nothing from the street in that first photo.
Right. Purposefully.
Well, purposeful or not, it's not a terrible thing. It just doesn't look like
right.
anything. The attractive side is the side that faces the view. I definitely would have led with that photo.
Yeah.
But this was somebody who I'm assuming, and I'm creating my own story here. I understand that, but been around long enough to maybe there could be some accuracy in it. And that is maybe somebody who built this house. I believe it's the original owner selling it, who just loved the house and believe it was worth $2.9 million, which is what they started on market at. So although we're even seeing a reduction, this originally started at 2.9. So with that said, this is a good example of an experienced agent who's been through multiple real estate cycles.
Right.
Speaking with a client and saying, look, we might be in a market shift. We might have a softer market after another interest rate hike, but it's a bunch of mights. Or maybe the client themselves just felt that way and were concerned that the market would shift. So they went down aggressively really fast.
Yeah.
Did they just shoot for the stars and miss and go, all right, fine, I'll settle for reality? Or were they panicking? Who knows? Time will tell. We'll probably look back at this a couple months from now and go, yeah, they could have gotten a lot more if they would have held out, or good for them, they sold. But who knows? And I say that to all buyers and sellers who are thinking about it. And what we always say is it the right time for you?
Right.
And there is an element of you present the best product, you put your best foot forward on the buy or sell side, and it works or it doesn't.
Yeah.
There is some market response that is out of everyone's control.
Yeah. Well, I have to say here too, I liked it when I walked in and checked it out. I'm sure a lot of people did, but it is a particular buyer that likes this kind of architecture. It may not appeal to everyone. And
it's also the outdoor space was not great. This was very much about the house. And look, it's not uncommon, that house that you just showed. I don't remember the street, but the new build with Tracy Do. That was on a 5,000 square foot lot. This one's on Lucille. This one's on a particularly steep lot near the peak of that lot. Access can be a little complicated. And then just not a lot of outdoor space. But the house is amazing. This was about the house. and then partly about just the overall quality of the neighborhood.
Mm-hmm.
So yeah, cool.
Cool. Well, congrats on getting that done.
Yeah,
To
yeah, I agree.
Mr. Lightfoot. Yeah. Um, okay. Let's move on to. Let's see. I think that was it from my side, Darren. Yeah,
Cool.
that's it. Yeah.
All right. Well, we're consuming a little more time today to get here. We just had a lot of data to talk about with that Fed rate. It's really important
Yeah.
people understand.
Mm-hmm.
We should definitely send out a notice just that interest rates are down, not
Yeah.
up.
Yeah.
Just to make that clear for everyone out there in the market.
Mm-hmm.
Now, do we know again? Does that mean the market will stay strong? I don't know. That
Right.
would be the assumption. Um,
Right.
so again, do what's best for you in the timing that's best for
Yeah.
you.
Yeah.
But
Yeah.
ultimately, it's going to have an impact. So,
Yep.
all right, actives 1162 Montecito Drive.
Oh, look at that.
I know. So we've
Yeah.
sold many homes on Montecito Drive up in Montecito Heights, and this person, let me quickly scroll through. This is a fixer. It's a great price at 635. I think it should be gone personally in a matter of days. But it's a giant cliffhanger. And look at this. They did take some drone photos. Okay, that's what I wasn't sure of. Yeah. So we always put that photo from the backside of these houses right up front.
Right.
In this particular case, they put them at the end, but they have them there. So good for them. These houses can be both easy and complicated to work on, and there's definitely a very specific buyer that is comfortable with it. But I will say this: fantastic neighborhood. If you're willing to deal with a fixer, this is an amazing price, and it'll pay off if you do.
I was going to say, let me just go through the stats. So 1162 Montecito Drive, 2-bedroom, 1-bath, 984 square feet of living space. Yeah, great active price. Wow, 635,000. 8,500 square foot lot. This is so far 6 days on the market. This is presented by Lynette Williams as the listing agent. Gosh, man, do you two things I'm wondering. Do you think they were flipping this maybe, or trying obviously to get it remodeled for a better price, and then they just kind of gave up on it because of the market?
This one particularly, I did some searching. No, Mike, I'm thinking it was probably a rental. So this is an internet broker out of area.
Well, that's the next thing I was going to say. Yeah, go ahead.
Yeah, I noticed that. And the person that owns this does not live far away. So this was a rental. They have a primary address that's in another in the neighborhood, but not this house. So my guess is just a renter moved out and they were ready to sell it in a much appreciated market because they've owned it for quite some time.
Yeah. But yeah, that was my other observation. Is that is it priced right? Could it have pushed a little bit more? I don't know.
Well, look, so we talk about a lot of properties that are priced low and then they sell high. There's specific brokers that have a tendency of doing that. And then sometimes there's just a question of value. I think up on these hills, people don't understand the value. They haven't for a long time. We were a little more of the trailblazer up there in Montecito Heights and pushing the numbers on these cliffhangers up there. Now, look, this could have foundation problems, and I don't know that answer. But if it has foundation problems, it's stilts construction. That could be a reason for the price. Definitely something worth looking at. But no major problems other than what's obvious in the photos. This should be in the price range of $1 million as a finished property. So you work backwards from there to determine what it's going to cost you to get.
Seller started rehab but couldn't finish the work. That's what it says. Cool. Roof doesn't appear to leak, but just about everything else in this two-bed, 1-bath home with an extra bonus room is in need of mending. Okay, so
with a bonus room, yeah, nice.
Very much appealing to an investor. So there you go. All right.
Cool.
All right. Let me go back here.
So
Okay.
the next one I wanted to look at was 3561 Verduga Vista Terrace.
3561. Okay. All right. That looks nice. Let's see.
I just like this little pocket
Mm-hmm.
of Glass Hill Park, Mount Washington transition area. The house looks clean. I was talking about, that 950 or 980 square foot house on
Mm-hmm.
Lakeshore and Baxter at 1.3. You get
Wow.
2,200 square
Yeah, you're
feet
right.
here for 1.3.
Right.
And it's a nice, very walkable neighborhood here. And this is a lot of house. So I think there's good value in this at this price point. And depending on how the market is responding right now, someone could pick it up at good value, or it might rise depending on if the
Yeah. Well, I think.
competition is out there.
Well, my guess is it's going to rise. Let me just
So,
say 3561 Verduga Vista Terrace. This is Glass Hill Park, 4 bedroom, 3 bath, 2,200 square foot of house. And on the lot side, 4,800 square feet, listed at 1,349,000. Two open Saturday and Sunday, 2 to 4 p.m. Days on market, 6. And brought to us by Elias Tabach and Tracy Doe. So
got
I think
it.
I think it'll go
Yeah.
up. Yeah.
Yeah. So we were just saying, so they have a tendency to underprice. So yes,
Yeah.
if they underprice, then they work hard to get it to rise. So
Right.
yes, I would agree.
Yep.
Okay. Based on
All
that,
right.
the more you know.
Wow.
Okay.
What else?
So Druid, I wanted to go to 4701 Druid Street.
All right. Where's it? Okay.
I like this little pocket of El Sereno. I'm trying to
Uh-huh.
remember if I sold this house. If not, it was one very close to it on Druid.
Uh-huh.
It would have been many years ago, probably 14, 15 years ago.
Got it.
Uh, and I sold it as a short sale. Um, so this pocket is very cool. It's not Hillside Village, but it's right across from it, and it's still a bit of a reasonably priced pocket.
Mm-hmm.
Um, at 850 for a 2-1 in a nice neighborhood, and the property's in good condition. It shows well.
Right. Okay. Well, 4701 Druid Street. This is El Sereno. 2 bedroom, 1 bath, 1,054 square feet of living space, listed at 850,000 on a 10,925 square foot lot. Friday and Saturday, they'll have open houses. Friday 5 to 7, and then Saturday 2 to 5. It's been on the market for 7 days now, and this is brought to us by Andrew Reyes.
Cool.
Yeah.
It's a great
All right.
house.
All right. All right.
I think I had one more. I'm not going to go for the super mega mansion, beautiful, dreamy house this time.
Well, gosh, man, last week we outdid ourselves with that.
Well, there's another one.
Oh,
It's $7 million this time.
okay.
Oh, sorry, $8 million.
Okay.
All
Oh,
right.
that's a
So
deal.
yeah. Ridgeway, 1441 Ridgeway.
Okay. Which way? Right.
So this one is Angelino Heights in Echo Park.
Nice.
Been on the market for a couple days. Guess what I didn't look at, and this one's not staged, not prepped. It's got a lot of land. Okay, it has a garage. Oh, that's not a real garage.
What is it?
That's funny.
What is it? Carport? What is it?
It's a carport that they put a garage door on. It looks funny. It serves and acts like a garage, but it looks funny.
Wow.
So, that's a big house with off-street parking, which is a concern in Angelino Heights,
Yeah.
at that 1.3,
Yeah.
right? If this was fixed
Wow.
up, it could probably be
Wow.
1.7.
Yeah.
That's my guess.
Yeah. Well, let me get into it. 1441 Ridgeway. Again, this is Echo Park, but again, Angelino Heights area. 3 bedroom, 2 bath, 1,520 square feet of living space for a whopping 1,295,000. It's a 7,400 square foot lot. It's been on the market for just 2 days, and this is brought to us by Alan Glogovisian. Glogovisian. Okay. All right. Well, there you go. What do you say to this, man? I looked at who the broker was, and I said, this is not what they put in their commercials. This is, um,
Wait a minute.
well, I forget what they say exactly, but if you want to sell for cheap, this is what you get, guys.
Yeah.
You get bad prep, you get no marketing whatsoever. And we'll see how far up they go from 1,295,000. But pretty poor for being such a corporate giant as a brokerage. And I'll give them no publicity here. Yeah, it's kind of sad, very sad. But hey, it's Angelino Heights, right?
Well, it
So
will sell. Yeah,
yeah.
I imagine it should sell fast at that price point, and the agent will look good. One of the most interesting things about real estate is the balance of, working with the client. And look, an agent has their own methodology and what they think it's going to take to get to the highest sale and net
Mm-hmm.
you the most as a
Mm-hmm.
seller. But then you
Right.
have to deal with the seller. Are they
Right.
okay with upfront work, committing to that, committing the dollar amount to that,
Yeah.
committing to and believing that they will get more if they do the work? And you can't force your hands on anyone. It's just you're trying to work with them, and so I get it. This doesn't look well. It's certainly not the highest quality product in the neighborhood, but it means that some buyers going to have an opportunity to benefit probably
Yeah.
from the lack
Yeah.
of
Yeah. Yeah.
prep. We see
Yep.
that all the time.
Yep.
And what we didn't mention was volume.
Mm.
So I think if I remember correctly, Joe, was it like 21 sold and like
21. Yeah.
it was like
21.
39
Yeah. It's now
new
42.
listings?
Yeah.
42. So at this point, this is an absolute direction the market is heading. That's indisputable. We've probably seen at least a full 8 to 10 weeks of increased inventory at every time we're getting online every week.
Mm-hmm.
And this is the double is not uncommon. Twice as many new listings as sold.
Right.
So maybe we can start adding in the overall quantity of monthly inventory that'll be on the market, which is the gauge where people, one of the biggest gauges where you say whether it's a buyer or seller's market, how many months of inventory based on how many homes are selling per month.
Yeah, yeah, yeah.
Um,
We can definitely punch that in. Yeah, even right now we could do that. But the other thing, just numbers wise, if it's any indication, so out of that 21 that sold, 5 had price breaks or were at list price out of the
Five.
21. So
Yeah.
it's still,
So
at least according to that, it's still a very strong market to sell.
yeah, yeah. It's some people get more creative with the words as you read articles these days. But
Mm,
people are crying wolf, and they're like, yes, it's a shifting market, and prices are accelerating at a lower pace.
mm-hmm, mm,
That's a change in the market, but it's not a flip from a buyer
right.
to a seller to a buyer market. It is price deceleration that ultimately most of these articles end up talking about, and
Mm-hmm,
reduced volume. There's there's no real evidence of across the board
right.
um, lower price points and lower growth. There's still growth in the
All right.
market at this point, and I think this recent shift in interest rates is likely to keep it there.
Yeah.
I think everybody across the board at least admits that it's slowing. The growth is slowing, but few are saying that the growth is going away and it's going in reverse.
All right. Well, I was going to ask you, what do we say to the kids? But I think you just did it, man. That's the summary right there.
That's the wrap
So,
up for sure.
so thank you for that. Thank you for that. Guys, we'll see you next Thursday, 2 p.m. Just have a great week. And if you have any questions yourself, definitely let us know. We'll be happy to help. Take care.
All right. Bye.
Bye, guys.